So another month has rolled on by pretty damn quickly in the stock market, which can mean only one thing, an update on my Freetrade UK dividend portfolio. Now, depending on what stocks you've actually invested in, you've probably felt that it's been like longer than a month soon. And of course, any bit of news has kept you on the edge of your seat and you've probably been sweating quite a lot of buckets at the moment. So just in a moment, we'll see how the portfolio has actually been holding up. In the meantime, of course, we're in a strange environment where we've got interest rates being slowly pushed up and high inflation, of course, all around the world. Here at home, we've seen the Bank of England finally raise inflation to 1%. So they added another 25 basis points recently. Although 1%, it's not exactly going to do much to the inflation at the moment. Now, inflation is currently running at 7% here in the UK, although I think we could potentially hit a number slightly larger than that when the next set of figures come out. So keep a close eye on for that one. Of course, very, very similar things happening in the US at the moment. Record high level to inflation. And of course, Mr. Powell at the Fed is trying to keep everything else under control as they steadily increase their rates another 0.5, 50 basis points for them. And the Nasdaq is seeing its worst start to any year ever. So it's not really a great time to be an investor at the moment, or is it? We'll touch on that a bit later. In other news, of course, you've got the oil giants making a lot of profits at the moment, although it's a bit of a mixed bag. We'll touch on BP later, but Shell certainly have had some great results coming out recently, although it's not exactly a surprise with the oil prices and gas prices the way they are. Their prices and their costs haven't exactly risen as much as the price of the commodity. So whether that ends up being a windfall tax or not on that one, which some UK politicians are calling for, who knows? I'd rather they just invest the money into the infrastructure and maybe invest it in clean energy and such. Otherwise, if you take away all the money, there's nothing left to spend. On a positive note, just before we head into the actual portfolio itself, let's just have a little look at the FTSE 100 versus the S&P 500 this year, because I think we're going to be in for quite a surprise. As you can see, the FTSE 100 is only actually 0.77% down versus the S&P 500, which is currently 13.5% in the red. So those FTSE 100 stocks are holding up nicely. As much as they might be dinosaur and old-fashioned, I think I'd rather be holding them at the moment. Oh, this one made me laugh on Twitter earlier. Have a little look at this one. Although we're meant to diversify, if everything's red, then don't worry, because there's basically nothing you can do at the moment. So who knows what's going to happen by the end of the day. Anyway, let's have a look at the portfolio. So let's firstly head over to that Insights tab on the app, which will tell us how the actual portfolio has performed against VWRL, which is Vanguard's FTSE All World Index. Now, last month we were 33.24% up. So we'll have a look how we're doing at the moment. As you can see, we're doing pretty well against that wider index. Those stocks have held up pretty well, not necessarily because I've timed the market or made any exciting picks. I think it's just a good time of year and it's just a good time in the market for those commodity stocks and those cash producing dividend players. Let's also now have a quick chat about some of the buys I've been making in the account. Anytime I get free shares or dividends, which we'll also talk about in a moment, I've just been drip feeding into this account. So we can see Legal & General, I've made two different purchases, £22 and also over £50. I've made some purchases in Aviva at £30.64p. I've made some purchases at Tesco, £42.69, because every little helps. And I've made a couple of purchases of Vodafone at £7.75, £49.68 and also £11.14. You might be thinking, well, why did you pile randomly into Vodafone like that? And really, it's not because of any good fundamental reasons. It's actually because anytime I get like a really small amount of spare money or I get like a free share into the account, because Vodafone's share price is actually just a few pounds, I just think, oh, well, I'll just put some money into that rather than buying any other shares, which I have to save up for. So before you wonder, it's not because I'm an amazing stock picker, it's because I just have a few pence left. Now, we're actually finally seeing some good dividends in the account. So let's have a look at what we've had this month for dividends. We've had Diageo coming in at £1.46. GSK giving me £1.61. We've had HSBC coming in at £7.46, which is a whopper. But the biggest one is our friends over at Rio Tinto, who've given us two dividends. We have a special dividend and a regular dividend. We've had £9.20 plus £1.36, which is a huge amount of money considering that this is just a very, very small portfolio indeed. So it's been quite a good month for dividends overall. And of course, you can start to see how you can finally build up that nest egg and build up that snowball to actually compound those returns over a long period of time. In terms of winners and losers so far in the account, the biggest losers or the ones so far in the red at the moment, at first we've got Legal & General, but of course they went ex-dividend on the 21st of April, payment date of the 1st of June. I've not seen any other kind of results or anything else which would push their share price down. And of course I have been buying into Legal & General as well at the same time. Another loser, unfortunately, Unilever. It kind of continues to struggle really. Some are calling for the business to actually be broken up into its different constituent parts because of its very mediocre performance. I would say I probably support that, because at the moment it's just really not doing anything. It's been very, very flat. So I think actually doing that would probably help it somewhat. Now, it is a steady dividend payer and it's not exactly going to go out of business anywhere because it is a bit of a cash generating giant, but all of those different brands, all of those different business segments probably kind of need to go in their own separate direction, but we'll keep a close eye on that one. So winners, you'll have no surprise here that BP is one of our biggest winners, but of course it's actually had a bit of a strange time recently because it lost $20 billion from exiting Rosneft, the Russian arm of the business. But overall, the other figures look pretty strong, so I'll pop their recent earnings up now. They reported operating cash flow of $8.2 billion during the first quarter. That's compared to 6.1 in Q4 of 2021, and then also surplus cash flow of $4.1 billion, and that's compared to $2.9 billion in fourth quarter of 2021, which is pretty good. So if you removed Rosneft from those Q1 results, then the income and revenue and profit has been pretty damn good, as you might expect, because the commodity is so high. And again, big questions in the industry about whether or not they should suffer from a windfall tax, but it doesn't look like we're going to be going that way. Again, I'd rather just reinvested that into their own company or rewarded shareholders, but here goes. National Grid's been holding up well, but it hasn't really changed much. I think I just got quite lucky and bought it at a decent time. But as you can see, it doesn't really do much. It doesn't really generate a huge amount of capital growth, but it is a very reliable dividend payer. I think the only issue, of course, is with all of these dividend payers, if they pay me 4 or 5% a year and don't grow, unfortunately, that doesn't yet beat inflation. So we do need a bit of capital growth on top of the dividend to actually beat inflation. Otherwise, there's no point of actually investing in the first place. But it's not going to be going anywhere anytime soon. And then finally, GSK is holding up well. So they had some really nice, strong Q1 results, and there is a bit of news in that company. They are going to be demerging into 2 organizations, and one will be called Haleon, which is happening in June of this year. So Haleon's going to be the consumer healthcare side of the business. So that's going to have brands like Sensodyne, Panadol, and Advil. So watch that space for more information. From the research that I looked into, they are expecting that company to have to actually stand up on itself in the FTSE 100. So you will see a GSK and a Haleon, at least that's from my understanding. So interesting news nonetheless there. At least they're doing better than someone like Unilever. So that pretty much wraps things up for this portfolio update on Freetrade. If you want to see any of my other portfolio updates, I've got a specific playlist for all of them that goes through Vanguard, Hargreaves Lansdown, and Lightyear as well. Or if you wanted to start your own dividend portfolio, then you might want to check out this video here where I take you through everything you need to know about getting started in a dividend investing portfolio here in the UK. Anyway, thanks so much for watching the video. Drop me a big fat like if you've enjoyed it, subscribe for many more, and I will see you in the next one. And as always, happy investing.